Hello dear traders, you're watching the weekly review of financial markets with me, Anna Kasatkina. The US stock market closed sharply lower last Friday. All major indices posted their worst day in more than 2.5 months after a downbeat round of economic data from Europe and the US. In addition, a closely watched measure of the yield curve inverted for the first time since 2007, triggering recession worries. The Nasdaq Composite Index declined by 196.29 points to 7,642.67. Its weekly loss was 0.6%. All benchmarks had their biggest one-day drop since January the 3rd, with the Dow Jones Industrial Average tumbling by 460.19 points to 25,502.32. For the week, the blue chip index fell by 1.3%. The S&P 500 index was off by 54.17 points to 2,800.71. The S&P 500 lost 0.8% over the week. Global growth concerns sparked after a round of March PMI data pointed to a further slowdown in activity across the Eurozone. Those fears were accompanied by weak US economic data, which showed growth in the US manufacturing sector slowed to a 21-month low in March. However, existing home sales hit an 11-month high in February, and new home sales posted an 11.8% increase over the previous month. The US-China trade relations remained in the headlines after President Donald Trump said, "I think we're getting very close to a trade deal with China." End of quote. In corporate news, Nike shares slumped by 6.6%, even after the company reported fiscal third-quarter profits that beat analysts' expectations and revenue that was in line with the forecasts. The stock has risen by 19% year-to-date. Meanwhile, shares of Hibbett Sports rallied by 20% after the sporting goods store operator reported same-store sales growth of 3.8% versus the flat growth expected by analysts. The firm also issued guidance for the full 2020 fiscal year that surpassed forecasts. And this was Weekly Financial Review on Insta TV. Thank you for watching and stay tuned.